Hey friends, last June I was in Fort Collins, Colorado visiting my cousin, and on a Saturday morning we decided to bike one of the beautiful bike trails in Fort Collins. He gave me one of his bikes and he took the other one, and all was well with me for the first 5 miles, but on the way back I was huffing and puffing even though I'm in good shape. Well, we pulled over and exchanged bikes, and then in short order he was huffing and puffing too. When we got home, he surmised that there was a problem with the hydraulic brakes on that bike. And when he got it repaired, it turned out that the brakes were rubbing, and therefore we were riding the brakes. Well, upon hearing that, my business finance consultant mind immediately conjured up the analogy that running a business with poor financial management is like riding with the brakes on. It slows you down and makes it harder to get to your destination. Operating a business with slack financials and little to no financial analysis is like riding a vehicle blindfolded. The odds of getting where you want to go are slim and the likelihood of crashing is high. Accounting is the guidance system for your business. The numbers will tell you where you've been and what changes need to be made. All you need to do is learn a few fundamentals from a good CFO consultant and you'll be set. Never again will you have angst about your finances. Your decisions will be more accurate. You'll minimize taxes and make your estimated payments on time. You'll know which clients are profitable and which are not. You'll understand the gross margin and net margin that you need to make your hard work pay off. The chances of getting ripped off will be less. You'll have the information you need for lenders and investors at your fingertips. And most importantly, you'll have full command of your business. Now, good bookkeeping and a good CFO consultant should remove the brakes that are holding you back. Believe me, a properly run accounting department will do more to accelerate your growth and improve your bottom line than any other department in your company, including sales. How could that be? Well, I'm going to show you here on a little example. Here on the left side, we have a scenario with bad accounting. In year one, $5 million in sales with a net margin of 5% is $250,000 in net income. If we grow in year two 20% and get to $6 million in sales, or a $1 million increase, and still stay at 5% margin, net margin, we'll make an extra $50,000 on that additional $1 million in sales. Now, let's assume that in year two, we improve our accounting. So year one, the same scenario, $5 million in sales and $5 million, 5% net margin, or $250,000 net income. But let's assume zero growth as opposed to 20% growth over here. Zero growth, so we stay at $5 million, but by virtue of good accounting, we improve our net margin by 5 points to 10%. That means our net income will be $500,000, which is 10% of $5 million, and an improvement of $250,000 year over year. The difference between this good accounting result and this bad accounting result is $200,000 on $1 million less of revenue. So here we did $6 million in year two and made $300,000. Here we do $5 million in year two, but make $500,000, an improvement of $200,000. So that shows you just how powerful good accounting can be and why it's so essential. Why not let me put the right pieces in place for you now so you can stop riding the brakes as well. Now, if you like this blog, please share it and like it here on this site, and please comment too. This is Robert Band, your business finance expert. Would you like the feeling of having great financial management? Then let me put the right pieces in place for you. Remember, one tip could be worth millions, and profits today, because of the compounding of interest, become fortunes tomorrow. So don't let them fall through the cracks. I'll see you next time.